good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are all of the top headlines that we're tracking for you this morning. There's a lot for us to talk about after that big inflation number from the United States. We did see a good handover come through from Wall Street, and on the back of that, you have all of the Asian markets which are trading with good gains. Gains this morning are led by the Japanese Nikkei markets, which are over 3% in the green right now. You have Hang Seng and Taiwan on your screen, and both of those also seeing good gains of around 2.5% each. So that is the kind of up move that we're seeing across the Asian markets. The Korean markets are also opening quite well, so they've currently around 2.5% in the green as well. Shanghai Straits a little bit, the kind of up move that we've seen isn't as significant as this, but they're both around 1% in the green as well. So all in all, for Asia, it's looking like a good start, and the SGX Nifty will also come up for you. It is indicating a good gap up start for the Indian market. 288 points higher is what we have for us on the SGX Nifty. So that's what's happening in Asia, but let's also talk about the US markets now. Wall Street staged a sharp reversal overnight after a sell-off in early trade, led by, of course, the red-hot inflation print for September. So the Dow Jones ended 2.8% higher. The S&P 500 closed around 2% in the green. It was 2.5% higher, actually, at the close, and the Nasdaq also saw a 2.2% up move. Now, stocks staged a massive turnaround, ending a 6-day losing streak after the September retail inflation came in higher than expectations at 8.2%. This also reinforces expectations that the Federal Reserve will continue with the large interest rate hikes that we have been seeing in the coming months as well. So here's CNBC's Rick Santelli with an analysis of the CPI print that came through.
Number up 0.4 on headline, double the expectations, and that is the highest since, well, June, when it was at its peak at 1.3. That was the highest since 2005. If you strip out the all-important food and energy, also 0.2 hotter, up 0.6. That's the hottest since June, when it was up 0.7. High water mark all the way back in April of 21 at up 0.9. Year-over-year numbers, 8.2, hotter than expected, but cooler than the rear view mirror. 8.2. Until we get a revision, it follows 8.3. The high water mark here was 9.1. That was in June, going back 4 decades. And finally, year over year, strip out food and energy, also hotter than expectations, up 6.6. That follows 6.3, and 6.6 is a new high. The old high was 6.5 in March. That went back to 1982, but in 1982 we went all the way up to 9.3. So even though it's a new high water mark, it doesn't change the comp back 4 decades to 1982. If you look at yields, they are just skyrocketing. We're almost back up to 4% in tens. Now let's go to initial jobless claims. 228,000. That is up 9,000 until we get a revision to the 219,000. And on continuing claims, 1,368,000. Darn close to expectations. Very close also the rear view mirror, 1,361,000. But we can really see the yields have shot up here to 4%. And if you look at what's going on with regard to 2-year note yields, they're all the way back up to 4.32.